Yeah, welcome to the call. We started shortly. We'll get started with the call shortly.
Okay.
Okay, we'll be getting started shortly. Less than a minute.
All right.
Good evening, everyone.
Good evening.
Okay, welcome to the Money Training Call, everybody. This is Rudy Clay Jr. out of Gary, Indiana. Anyone with, after you announce who you are, get your background noise out. But who's on the call this evening here with us?
You
The
have
big,
Bridget.
Hey, Bridget. Welcome to the call. That was a good call this morning.
Thank
Hey,
you.
who else we got?
the Billy's
Ken,
on the line from Gary.
Hey, Brother Benny. Welcome, welcome. And who else was that?
Ken,
See, we got Ken. Yeah, Brother Ken and Rakia, welcome to the call.
thank you.
Okay,
Virginia is
okay.
here.
Hey, Rakia, okay. Welcome to the call. We're going to get this call started. We always start our calls with prayer. So, Heavenly Father, we want to thank you for everything you're doing in our lives every day. Continue to bless us abundantly in all our endeavors. Continue to keep Team winning every day. We want to thank you in advance for that. And let this be a great, great training call where a lot will be absorbed very easily and understood very easily, and that you just have your power with it today, and also bless those that need your help today, especially in the hospital. Okay, in Jesus' name, amen, amen. All right, let's get this call started. Now, you know what this call is all about. Is for us all getting up to on the candlesticks, the charts, and everything. So we're going to start off here. You know, I want to say this is for informational purposes only, past profits don't. It was almost habit, but let's get started. We're getting into this Candlestick Trading Bible. It was invented by Moesha Homa. He really is Homa Moesha is really how it's pronounced, but he was the most successful trader in the world. And what we're going to be going over, the content, we're introduction, overview, history of candles, what a candlestick patterns, and all of that. And we're going through the candlestick pattern exercises. We're going to do some market structure and everything that we go through. I'm going to really explain it, the time frames and top-down analysis, trading strategies and tactics, the 10-bar candlestick pattern strategies. We were talking about that today, wasn't we, Benny?
Yes, sir.
Trading tactics, engulfing bar candlestick patterns, inside bar candlestick patterns. I mean, we're going to learn a lot, even the conclusion after money management strategies. That's really powerful. So let's get right into it. I mean, I might not read it every day, but we might have some people that love to read and want to kick in. It's okay. All right. So the Candlestick Trading Bible, the introduction. The Candlestick Trading Bible is one of the most powerful trading systems in history. It was invented by Homo Manusha, the father of candlestick chart patterns. Now, the trader is considered, this trader, talking about Homo, he is considered to be the most successful trader in history. He was known as the god of market in his days. His discovery made him more than $10 billion in today's money. So now he's talking to us. I have spent 10 years compiling, testing, organizing, and consistently updating this method to create my own new version, which is considered to be the easiest and most profitable trading system. Now, the Candlestick Trading Bible is the trading method that is going to finally take your trading to where it should be: consistent, profitable, easy, and requiring very little time and effort. That's what I'm talking about. That's good stuff. Okay, the trading system is based on the Japanese candlestick patterns in combination with technical analysis. So all what you have to do is to spend as much time as you can to master the method that I'm going to share with you and use it to trade any financial market. So learning Japanese candlesticks is like learning a new language. Imagine you got a book which is written in a foreign language. You look at the pages and you get nothing from what is written. The same thing is when it comes to financial markets. If you do not know how to read these Japanese candlesticks, you will never be able to trade the markets. So Japanese candlesticks are the language of the financial markets. And if you get the skill of reading charts, you understand what the market is, what the market is telling you, and you will be able to make the right decision in the right time. Okay? So the easy to follow strategies detailed in this work will provide you with profit-making techniques that can quickly be learned. More importantly, learning the principles of market psychology underlying the candlestick methodology will change your overall trading psyche forever. It is very powerful. It's a mental. We're going to get it going through this. The Candlestick Trading Bible has already proven itself. Fortunes have been made using the Japanese candlestick strategies, and I congratulate you on taking the first step in your trading education. You're on the right path to becoming a better trader. However, this is actually just the beginning of your trading career. After you finish this ebook, the real work begins. And that's why we have the money call. That's the real work. You're getting practice in a live market, Okay. Don't read this book very fast. This is not a novel. You should take your time to understand all the concepts I discussed. Take your notes and go back from time to time to review the strategies I share with you. So that's what we'll do. We're going to take our time on each diagram, each thing that it talks about, and everybody can discuss it. We can discuss it. If you didn't really get it, we're going to really open this thing up. All right. So remember, this is an educational work that will teach you professional methods on how to make money trading financial markets. Now, if you got the skills that I share with you here, you will change completely your life and the life of people around you. Now, is that a powerful statement? Let's read that one more time. If you got the skills that I share with you here, you will change completely your life and the life of people around you. And that's a true statement. Okay, here's the overview. The ebook is divided into the following sections. One is the candlestick's anatomy. Just as humans, candlesticks have different body sizes. When it comes to trading, it's important to check out bodies of candlesticks and understand the psychology behind it. That's what you will learn in this section. Now, section 2, the candlestick patterns. The candlestick patterns are an integral part of technical analysis. Candlestick patterns emerge because human actions and reactions are patterned and constantly repeated. And we see that all the time. We know how it always breaks out after consolidation. I mean, we see it, and everybody sees it. So it just flows. So in this section, you will learn how to recognize the most important candlestick patterns, the psychology behind its formation, and what do they indicate when they form in the market. And then number 3 is the market structure. In this section, you will learn how to identify trending markets, ranging markets, choppy markets, and you will learn how these markets move and how to trade them professionally. And you will also learn how to draw support and resistance and trend lines. And we do that with our eyes. Okay? But that doesn't mean, when you on your own chart that you can do, put trend lines if it helps you, So number 4, time frames and top-down analysis. Now, multiple time frame analysis is very important for you as price action trader. In this section, you will learn how to analyze the market using the top-down approach. And when we get there, I'll expand upon that, okay? 5, trading strategies and tactics. In this section, you will learn how to trade the market using price action strategies, the pin bar strategy, the engulfing bar strategy, the inside bar strategy, the inside bar false breakout strategy, trade examples. So I highly recommend that you master the previous sections before jumping into this section, because if you don't master the basics, you will not be able to use these strategies as effectively as it would be. So in this section, you will learn how to identify high probability setups in the market and how to use these candlestick patterns in trending markets and ranging markets to maximize your profit. And you guys have experienced some range markets and choppy markets and all that. We was kind of plowing through a little of it this morning. Okay, now 6 is money management. This is very important. In this section, you will learn how to create a money management and risk control plan that will allow you to protect your trading capital and become consistently profitable. And that's like going on in big time drawdown. Now, let's go over the history of candlesticks. Now, candlesticks have been around a lot longer than anything similar in the Western world. The Japanese were looking at charts as far back as the 17th century, whereas the earliest known charts in the U.S. appeared in the late 19th century. See, rice trading had been established in Japan in 1654, with gold, silver, and rapeseed oil following soon after. But the rice markets dominated Japan at this time, and then the commodity became, it seems, more important than hard currency. So Manisha Homa, aka Soiku Homa, a Japanese rice trader born in the early 1700s, is widely credited as being one of the early exponents of tracking price action. He understood basic supply and demand dynamics but also identified the fact that emotion played a part in the setting of the price. So he wanted to track the emotion of the market players. And this work became the basis of the candlestick analysis. He was extremely well respected to the point of being promoted to samurai status. The Japanese did an extremely good job of keeping candlesticks quiet from the Western world right up until the 1980s, when suddenly there was a large cross pollination of banks and financial institutions around the world. And this is when the Westerners suddenly got wind of these mystical charts. Obviously, this was about to the time that charting in general suddenly became a lot easier due to the widespread use of the PC, the personal computer. So in the late 1980s, several Western analysis became interested in the candlesticks. So in in United Kingdom, Michael Feeney, who was at the head of I don't know what TA stands for, but was at the head of TA in London for the Somoto, began using candlesticks in his daily work and started introducing the ideas to the London professionals. London City is the capital, the money capital of the world to this day. So in the December of 1989 edition of Futures magazine, Steve Neeson, who was a technical analysis at Merrill Lynch in New York, he produced a paper that shows a series of candlestick reversal patterns and explained their predictive powers. And he went on to write a book on the subject, and a fine book it is too. Thank you, Mercini and Neeson. Since then, candlesticks have gained popularity by the year, and these days they seem to be the standard template that most analysts work from. Now, why candlesticks are so important to your trading analysis? Well, candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. So by looking at a candlestick, we can get valuable information about open, high, low, and the close of a price, which will give us an idea about the price movement. So candlesticks are, now this is just an overview of candlesticks. We're going to explain everything in a minute. Just be patient. Candlesticks are flexible though. They can be used or in combination with technical analysis tools such as the moving averages and the momentum oscillators, and they can be used also with methods such as the Dow theory or the Elliott wave theory. Okay? And they also use the Fibonacci with it. So I personally use candlesticks with support and resistance and trend lines and other technical tools that you will discover in the next chapters. The human behavior in relation to money is always dominated by fear, greed, and hope. So candlestick analysis will help us understand these changing psychological factors by showing us how buyers and sellers interact with each other. So candlesticks provide more valuable information than bar charts, using them as a win-win situation because you can get all the trading signals that bar charts generate with the added clarity and additional signals generated by the candlesticks. And what they're talking about on a bar chart, I'll just because I know people say, "What the heck is a bar chart?" Okay, let's go to. I was going to go to his history here, but we don't need that. Where's trading view? I'll show you a bar chart right quick. Okay, you see where it has the candlesticks? Let's go to bars. Let me blow it up for you. See, that's a bar. That's the high and that's the low. That's a bar chart. Okay? And then these are candlesticks. So that's the difference. So candlesticks add more clarity and additional signals generated by the candlesticks than a bar chart. So candlesticks are used Candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day, and they can move the market whenever they want. And they can take your money easily if you don't understand the game. So even if you can trade $100,000 trading account, that's what a lot of us started on a demo. But you can't move the market, even if it was a live account. You can't control what's going on in the market with no 100,000, because they're using billions and stuff. So using the candlestick patterns will help you understand what the big boys are doing, and will show you when to enter, when to exit, and when to stay away from the market, even though we plow through it anyway. Now, what is a candlestick? Japanese candlesticks are formed using the open, which is a open, high, low, and close of the chosen time frame. So if the close is above the open, we can say that that candlestick is bullish. Let me explain bullish and bearish too. A bull, you know how a bull has the horns on it, and it always go down and try to pick the matador up. You know, the bull always try to pick you up with his horns. So a bull means it's going up. It's a buy. It's going up. And a bear, you know how a bear stands on his back 2 feet and then come down on you? That's how a bear attack. Well, that means bearish being down. It's going down. Okay? So if the close is above the open, we can say that is bullish. That means it opened right here and it closed higher right there. That means it went up. It's a bullish candle. Okay? Everybody got that?
And it's green.
Yeah, it might be white on your phone, it might or green on the chart. Yeah, and some people make them blue and black and all kind of stuff. But just to keep it simple, it's normally green. It's normally green. Green going up, bullish. Okay. So that means so if the close is above the open, like we see it open down here and it closed above, that candlestick is bullish, which means that the market is rising in this period of time. Now, the bullish candlesticks are always displayed as a white candlestick on phones, but on these charts, like Bridget said, it's green. So most trading platforms use white color to refer to bullish candlesticks, but the color doesn't matter. You can use whatever color you want. And the most important is the open price and the close price. All right? Now, let me pull up this. Let me pull this over. Okay. Now, the most trading, where was I? Right here. The most important is the open of the price and the close of the price. If the close is below the open, we can say that that candlestick is bearish, which indicates that the market is falling in this session. Bearish candles are always displayed as black candlesticks, but this is not a rule because they are red on the charts. Now, so that means if it opened right here and it closed below the open and it's a red candle, then that candle is bearish. It's going down. Okay, so everybody knows what a candlestick is. If not, ask questions. Okay, now you can find different colors used to differentiate between bullish and bearish candles. The field part of the candlestick is called the real body. The thin lines poking above and below the body are called shadows. We call them wicks. The top of the upper, let me scroll up so you can see it. The top of the upper shadow is the high. The bottom of the lower shadow is the low, the candlestick body size. So candlesticks have different body sizes, but you see it has, well, they say shadows, but we call them wicks. You see the little wicks, the little shadows above them. they're going to have the, traditional terms like shadows, or we might see we call it Bridget Point, we call it a double bottom, double top. They might call it tweezers, but overall, you should know what it is, okay? So long bodies refer to strong buying or selling pressure. If there is a candlestick in which the close is above the open with a long body, this indicates that the buyers are stronger and they are taking control of the market during this period of time. So you might see a little doji, but when you see a candle with some meat on it, that means the buyers are really kind of controlling at that moment. Or when it's a strong sale or bearish, it's, that the sellers are controlling it. So conversely, if there's a bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during this chosen time frame, meaning the selling pressure. So short and small bodies indicate little buying or selling activity. We know that. Or indecision, Now, the shadows or tails, we call them wicks. The upper and lower shadows gives us more important information about the trading session. See, the upper shadows signify the session high. Lower shadows signify the session low. So I'll say the upper wicks, the wicks at the upper side, they signify the session high. And like this is high as that candle ever went. It might have closed down here, but that's high as it ever went. That's the high. So lower shadows signify the session low. No matter where this little body closes at, we know it been down, it been there. That was the low. So candlesticks with long wicks show the trading action occurred well past the open and close. Now, what does that mean? Anybody can tell me what that means? Let's read it again. Candlesticks with long shadows show that trading action occurred well past the open and close. Now, let's say it opened down here and it went now the open and close is just right there. But this candle went all the way down here. It went all the way up here, way past where it really was opening and closing at. Y'all see that? So the wick shows where the candlestick has been, Okay, Japanese candlesticks with short shadows indicate, I'm gonna use the word wicks. Do you want me to use shadows or wicks? We always use wicks.
Wicks is fine.
We know what you mean.
Okay, y'all know what I mean? Okay, so the Japanese candlesticks with short shadows indicate that that most of the trading action was confined near the open and close. And where's I saw it up here on the doji, but we'll keep going. If a candlestick has a longer upper shadow and a short lower shadow, this means that the buyers flex their muscles and bid price higher. Do you guys get that? If a candlestick has a longer upper shadow and a short lower shadow, this means that the buyers flex their muscles and bid price higher. They brought the price way up here, even though it closed down there. Are you getting that?
Yes.
Yes, sir.
Yeah.
But for
Yes,
one
sir.
reason
Understand.
or another, yeah, but where it's not. See, wherever you see this wick is where the push is. So the buyers is way up here, but if you see a long a long shadow or wick, that's the direction that it's been pushing down. They had it up here, but it's pushing down. It's really the sellers on this one. This is where the buyers have it.
Yeah.
And I just said it backwards. But if a candlestick has a longer upper shadow and a short lower shadow, this means that the buyers flex their muscles and that's over here, and be at a higher price. But for one reason or another, sellers came in and drove price back down to end the session back near its open price. So that was the candle. They pushed it back down. So the easy way to explain it, I'll finish reading. If a Japanese candlestick has a long lower shadow and a short upper shadow, this means that the sellers flashed their watchboard abs and forced the price lower. But for one reason or another, a buyer came in and drove the prices back up to end the session back near its open price. Anybody with background noise, mute yourself out. Now, what all that is saying is wherever the long wick is the way it's pushing. So if this wick is pushing upward, this wick they were pushing downward. Like the sellers, they might have been up here with the buyers, but the sellers came in and drove that thing back down. So wherever the long wick is the direction it's pushing. If you see a long wick under the candle, you know it's pushing it upward. If you see a long wick forming above, it's pushing downward. Okay? Now, the candlestick patterns. Candlesticks patterns, they are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups. Research has confirmed that candlestick patterns have a high predictive value and can produce positive results. And we look at these patterns every day. Now, I personally trade candlestick pattern for more than 2 years, you know. Okay, let's. I'm gonna just read it. I'm just having fun. I personally trade candlestick pattern for more than 20 years. I can't really switch to another method because I tried thousands of strategies and trading methods with no results. I'm not going to introduce you to a holy grail. This trading system works, but be prepared to draw down on some trades. You know, drawdown is a part of the game. If you're looking for 100% winning system, I highly recommend you stop trading and go look for another business.
Right.
Candlestick patterns, well, I tell you, what we're getting on you know, it's not 100%, but 90 and above is good too.
That's right.
Okay, candlestick patterns. Huh? Candlestick patterns. Go ahead. Say that again.
Said, yes, sir.
All right. Also, now, if I hear you say teach hard or go ahead, I know I'm rolling.
Oh, go ahead.
Okay. Candlestick patterns are the language of the market, though. Imagine you are living in a foreign country. You don't speak the language. How could you live if you can't say a word? It's tough, right? So the same thing as when it comes to trading. If you know how to read candlestick patterns the right way, you will be able to understand what these patterns tell you about the market dynamics and the traders' behavior. This skill will help you better enter and exit the market in the right time. In other words, this will help you act differently in markets and make money following the smart guy's footprints. So the candlestick patterns that I'm going to show you here are the most important patterns that you will find in the market. In this chapter, I'm going to show you how to trade them because this will be explained in details in the next chapter. So what I want you to do is focus on the anatomy of the pattern. Is that anatomy? I always had.
Anatomy.
You know, yeah, anatomy. Okay. What I want you to do is focus on the anatomy of the pattern and the psychology behind its formation because this will help you get the skill of identifying easily any pattern you find in the market and understand what it tells you to do next. So if you can get this skill, you will be ready to understand and master the trading strategies and tactics that I'm going to teach you in the next chapters. All right, now, Homer.
All right.
Come on with it, Homer.
You getting it? Come on.
All right. Here we go. the engulfing bar candlestick pattern. Now, the engulfing bar, as it states in its title, is formed when it fully engulfs the previous candle. The engulfing bar can engulf more than one previous candle, but to be considered an engulfing bar, at least one candle must be fully consumed. So the bearish engulfing is one of the most important candlestick patterns. This candlestick pattern consists of two bodies. The first body is smaller than the second one. That means the second is engulfing. In other words, the second body engulfs the previous one. See the illustration below. You get a little small body, and that next candle, the opening, it engulfs that whole candle. That means not only 100% retrace, but 110% retrace, you know?
Okay.
So this is how bearish engulfing bar pattern looks like on your charts. This candlestick pattern gives us valuable information about bulls and bears in the market, because we already just learned that if it's a thick candle, that's where the power's at. The bears are in control. The bears is getting it, you know.
Mm-hmm.
Okay, in case of a bearish engulfing bar, in case of a bearish engulfing bar, this pattern tells us that sellers are in control of the market. So when this pattern occurs at the end of an uptrend, this indicates that the buyers are engulfed by the sellers, which signals a trend reversal. See example below. See, we all see that doji, and we say, oh, that's evening stars coming back down. Well, it's basically an engulfing candle, too. It's a bearish engulfing bar. So
And
as you can, go ahead.
and
Question?
it's a double top. It's a double top, too.
Sure is. Uh-huh.
What did she say?
So as you,
It's a double top.
Oh, okay.
So it's an automatic reversal.
Okay. Thank
Yeah.
mm-hmm. And you've heard us say, and you heard me say, that doji can signal a reversal without saying, oh, look at that engulfing bearish bar.
Right.
But it's the same thing, you know. The doji signals that too. But both of these, but when you get them both together like this, a full engulfing, that's what the technical thing is. It's a bearish engulfing bar, and it's nine times out of 10, 99% of the time, it signals a reversal, signals a trend reversal. So as you can see, when let me go up just a little more. Okay, as you can see, when this price action occurs in an uptrend, we can anticipate a trend reversal because buyers are not still in control of the market, and the sellers are trying to push the market to go down. So you can't trade any bearish candlestick pattern. I mean, you can't trade any bearish candlestick pattern you find on your chart. You will need other technical tools to confirm your entries. And that's why I say, oh, got that little doji. That's a little confirming that bearish engulfing bar trend reversal, evening star. You know, but this usually is a lot more visible on a long trend, at the end of a long trend. That's why you see 1, 2, 3, 4, 5, 6, a whole bunch of candles. But if these was red, if these was black, white, black, white, black, black, white, 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 you know, we look for these dojis too. So we will talk about this in detail in the next chapters. Right now, I just want you to open your charts and try to identify all bearish candlestick patterns that you find. The book, okay. What charts? Let's go to the charts. Okay. Let's do it. Hold on. I want you to open your charts and try to identify all bearish candlestick patterns that you find. Let's see here. Okay. Let's get out of Apple.
Ooh, we.
Man, I gotta pull this thing somewhere else so I can read. Okay, we're on go, and let's go to the, well, we'll go 30-minute chart and see where do you find. Now, the bearish candles are the red candles. In fact, I'm gonna
I
see how many.
Oh, that's at the bottom. It's at the bottom. It's a
Oh,
river.
I'll give you guys another shot at the question too. Identify all bearish candlestick patterns, not candlesticks, that you find. And the only one it just showed us was the bearish engulfing bar, right?
Right.
So we're going to see how many bearish engulfing bars that we can find on the chart. Okay, let's start over here. And let me know when it comes to a bearish engulfing bar.
Wait. Okay, bearish engulfing.
He's got some long wicks, so we're not going to count the wicks. We're just counting
That's one.
bodies.
I got one.
That's
Where?
one.
Yep.
Right here? No.
No.
The
Nope.
red
Right
is-
on.
Nope. Keep going to the right. To the right. To the right. Keep going to the right. That's your military left. Right there. Right there. Go back. Go back. Go back. Right there.
Yeah.
That's it. That's it. That's a bearish engulfing. This candlestick body engulfed this candle, the previous candlestick body.
If you go right there's one. That's one.
That's a engulfing. This is a engulfing from the previous candle.
Yeah.
Y'all see that?
Yeah.
And it did trigger a kind of reversal. It did come down, but the doji, this is an engulfing on this little candle here.
Yeah.
That's a bearish. This is kind of equal. This is a engulfing bearish right here. It's bigger than this candle. So you guys see that? I don't see it causing a trend reversal, but I do see the engulfing, candles. You guys see them?
Yeah.
Yep.
Okay. It's basically the red candle is bigger than the green. Okay. So when we talk about this in detail, next shot just to do the bearish candle. So we just did that. Now the bullish engulfing bar pattern. Now the bullish engulfing bar pattern consists of two candlesticks. The first one is the small body, just like the other one, and the bearish. But the second is the engulfing candle, is a bullish going up. This body engulfs this body. Okay, so the bullish, and I'm trying to see where I can put this. Okay, I'll put it up here. Okay, the bullish engulfing bar pattern tells us what the market is no longer under control of sellers, and buyers will take control of the market. And when a bullish engulfing candle forms in the context of an uptrend, it indicates a continuation signal. That's interesting. A continuation signal, not a trend reversal. Did y'all hear that? See, when a bullish engulfing candle forms in the context of an uptrend, it indicates a continuation signal. So, and we see that all the time. I'll give you a good example right here. See, all of this is going up, and then here come a bearish and continuation, bearish and continuation. So what it is saying is that when, oh, I'm sorry, when the engulfing is in a trend, that is a continuation signal. You see, this is a strong trend here, right? That's a strong trend. Now you see this green candle engulf that candle. You see it? On a trend, that's what I do. This candle has engulfed the previous candle. Then it did a little pull back, but then you get, where's another engulfing at? Here's an engulfing right here. Who can find me another engulfing? That's engulfing. This is almost even, Steven, but this is engulfing right here. And we don't use the engulfing strategy too much, engulfing, and look for trend reversals and continuation. But you can see the engulfing continues up. The bullish engulfing continues up. Yeah, that's pretty good. Pretty good. So it's something to keep under your hat. Okay, so everybody kind of understand that. I kind of understand it too. That this, if you catch it in a strong trend, don't worry about the little smaller bodies, because we already know the bigger bodies are in control, basically. You got it?
Yep.
Okay, see example below. The example above shows us clearly how the market changes direction after the formation of a bullish engulfing bar pattern. The smaller body that represents the selling power was covered by the second body that represents the buying power. So the color of the bodies is not important. What's important is that the smaller one is totally engulfed by the second candlestick. So don't try to trade the market using this price action setup alone, because you would need other factors of confluence. That means a lot of things got to line up together to decide whether the pattern is worth trading or not. I will talk about this in the next chapters. But what I want you to do now is to get the skill of identifying bearish and bullish engulfing bar on your chart. And this is the most important step for the moment. So if we look at this, we see that the buyers, the bullish candle engulfs the bearish, the selling. So when you see engulfing what they say, bullish or engulfing buys, it usually is a trend going up. We look at this same pattern. What will we say when we look at the same pattern?
Double bottom. It's going up.
There you go. That's a Bridget. That's a double bottom going up. Same thing. Okay. So I want everybody to practice looking at engulfing candlesticks. But one thing we got to know, if it's an engulfing sale, it can trigger a reversal. But if it's an engulfing buy, it can be continuation in a trend. Okay. So now here's some good stuff. Anybody with some background noise, please mute yourself. Okay, thank you. Okay, now the doji is one of the most important candlestick patterns. Now, when you use this candlestick forms, it tells us that the market opens and closes at the same price, which means there is equality an indecision between the buyers and the sellers. There is no one in control of the market. See example below. See this doji candlestick, the highest price, the lowest price, the closing and the opening. That's just straight equal. That's just straight indecision. Let's say we don't know who's in control. If the buyers or the sellers, it's just, as you can see, the opening price is the same as the closing price. This signal means that the market didn't decide on which direction to take. And when this pattern occurs in an uptrend or a downtrend, it indicates that the market is likely to reverse. Remember when I say we always will look for the doji for the trend reversal? It was talking about the engulfing bar. I said, well, we usually deal with that, that doji, where this is what it's talking about. See another example below to learn. Yep, here it is, the trend reversal with the doji. Okay, the chart above shows how the market changed direction after the formation of the doji candlestick. The market was trending up. You see how it was trending up? Mm-hmm. And that means that the buyers were in control of the market. But then the formation of the doji candlestick indicates that the buyers are unable to keep their price higher, and the sellers are pushing prices back to the opening price. So this is a clear indication that the trend reversal is likely to happen. And we usually see it real good at the top of the hours, the bottom of the hours at most times. I don't know why it's close to that, But the formation of the doji candlestick indicates that the buyers are unable to keep the price higher and the sellers push prices back to the opening price. This is a clear indication that the trend reversal is likely to happen. Now remember, always that a doji indicates indecision, equality and indecision in the market. So you will often find it during periods of resting, slow periods, and after big moves, higher or lower, like you get your big old breakout or a big spike or something, and then it just come on back down, or right after the New York market closed, it slows down, or the London close, So that's what it's talking about. So when it is found at the bottom or top of a trend, it is considered as a sign that a prior trend is losing its strength. Okay? So the doji can signal a reverse in the trend, and we always, when we see this, we be like, there go that doji. We also see an evening star, but we also see it could be a reversal of the trend. All right. So if you're ready, if you are already riding that trend, it's time to take profits when you see that doji. And it can also be used as an entry signal if it's combined with other technical analysis. So now let's look at the dragonfly doji. Now, the dragonfly doji is a bullish candlestick pattern which is formed when the opening high and close are the same or about the same. So what characterizes the dragonfly doji is that the long lower tail shows the resistance of buyers in their attempt to push the market up. See example below. See this bullish candlestick, the closing price, opening price, same, and the long tail. That's that push up, but they just couldn't push through. It's a push up. They couldn't push through. So it characterized, that long tail shows that there's a resistance of the buyers in their attempt to push it up past that, and it's not doing it. So that's called a dragonfly doji. Now, the illustration above shows us a perfect dragonfly doji. The long tail suggests that the forces of supply and demand are nearing a balance and that the direction of the trend may be nearing a major turning point. See the example below that indicates a bullish reversal signal created by the dragonfly doji. And there it is. Let me go up a little bit. Okay, you guys see how this trend was coming all the way down, had a few dojis sideways, and then it had that dragonfly doji where it's just trying to push up, so that lets you know that's a signal that it can start pushing up. So in the chart above, the market was testing the previous support level And this was like, let's say this, and you see this is support level, boom, boom, straight away. Let's say this is support level. And it caused a strong rejection of that floor was solid. Okay, let's say it's a bunch of them over here to the left. So this is the 4. Now, the formation of the dragonfly doji with the long lower tail shows us that there is a high buying pressure in the area. So if you can identify this candlestick pattern on your chart, it will help you visually see when support and demand are located. So when it occurs in a downtrend, it is interpreted as a bullish reversal signal. Hold on 1 second. Okay. So if you can identify this candlestick pattern on your chart, it will help you visually see when support and demand are located. Can you guys see that?
Mm-hmm. Yes.
Mm-hmm. I'm still looking. I see the support, and I don't see. It says this.
Cuz look up where it flipped.
Oh, got it. Okay, got it. Okay, when it occurs in a downtrend, this is interpreted as a bullish reversal signal. Okay, so but as I always say, you can't trade candlestick pattern alone. You will need other indicators and tools to determine high probability dragonfly doji signals in the market. So you will need some other kind of confirmation that this thing is reversing up. You can't base it all based on the dragonfly doji.
Mr.
What
Craig,
they basically, yes.
do we see that often? I can't say I've seen that often.
We see
On
it
the night
time and time
call.
again. We see it time and time again, but we do not use it as one of our signals because, and the reason is because of what it's saying right here. You can't trade the candlestick pattern alone. You can't trade based on a doji, on this dragonfly doji, because it's not consistent certainty. Sometimes it don't play out like that. So you got to have other variables to make sure it plays out like it's supposed to. That's why it says, but as I always say, you can't trade that doji by itself, because you need other indicators, because sometimes that doji don't do what I just said it do. You follow me? That's the layman's way of saying it. Okay, let's move on. You understand that? Okay.
Yes, sir.
I hope. Okay. So now the gravestone doji. The gravestone doji, and British, she points them out a lot. The gravestone doji is the bearish version of the dragonfly doji. It is formed when the open and close are the same or about the same price. But what differentiates the gravestone doji from the dragonfly doji is the long upper tail. So the formation of the long upper tail is an indication that the market is testing a powerful supply and resistance area. See examples below. See, it's the reverse. And I used to, I used to have my own names. I say, what is that? This shit, that's that graveyard. And I said, okay, what is that? That's that. And she said, okay. I said, what kind of candlestick? And they said, I said, dragonfly. I be calling it the hammerhead. I said, okay, they'll go that hammerhead. But it's really called a dragonfly. And this is called a gravestone. They both alike, only in different directions. You call it a gravestone when the stone is at the floor, at the bottom. It's bearish. And you call it up here. You see the difference is just backwards. Up here on a bullish. So they're the same candlestick. It's just one is a gravestone and one is a dragonfly. Now let's get a little more deeper into it. The image above illustrates a perfect gravestone doji. This pattern indicates that while buyers were able to push prices well above the open, that means they pushed it up. But this wick, always wicks are pushing down, pushing down. Wicks are pushing down. Whatever the longer wick is, that's the way it's going. That's pushing down. That's why that's called a bearish. It's pushing down. But it didn't say that right here. This has an indication that it pushes well above price. And okay, later in the day, sellers overwhelm the market, pushing the price back down. Oh yeah, okay. This is interpreted as a sign that bulls are losing their momentum. You know, the buyers are losing their momentum, and the market is ready for reversal. See another illustration. See, this thing was just going up, 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 and a little sideways doji and up. It was an uptrend. It was uptrend. But then you got the gray side doji. You see that long wick pushing down, pushing down. Matter of fact, you saw this pushing down right there. What do we call that? That's a spinning top. But this is pushed down, and or we can call that what we saw. We'll call it spinning top. But every time you see these wicks, that's where the push is. You don't see this wick down here. That means it's pushing up. This was pushing up and down. That means buyers and sellers. This is pushing down, and all. So now, but it's steady moving up. It's moving up. It's moving up. It's moving up. But you see, that's a long push down and no body. It's a gravestone. So, oh boy, it might be setting up for a reversal in the market. Now it's coming back down to retrace all these. You see that? And let's just see if we can show an example on the live chart here. What the heck? This thing keep popping up on me. And yeah, I want everybody to really get this here. Do we see any graveyard dojis? See, we see these dojis. It was a reversal. This doji, we call them morning stars and evening stars. So you don't see a whole lot of them, but they do happen. And they're usually, you find them at reversals. So you find them at the reversal points.
Mm-hmm.
But when you getting there, everybody should get the gist of what it's talking about.
Mm-hmm.
Okay? So let's move on. The chart above shows that. You know what? No, let's keep going. Okay, the chart above shows a gravestone doji at the top of an uptrend after a period of a strong bullish activity. So this was the bulls. It was going up, 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 up. Boom! After that, and that doji was that signal. So the formation of this candlestick pattern indicates that the buyers are no longer in control of the market. So for this pattern to be reliable, it must occur near a resistance level. Now that's the key. If you know this is the ceiling right up in here, and then you get that I call it a gravestone doji, then it's a high probability that is coming down. But we know that on any candle that's up at resistance, really. But that's what that's saying. As a trader, you will need additional information about the placement and context of the gravestone doji to interpret the signal effectively. But this is what I will teach you in the next chapters. So the next chapter will start tomorrow, and that's what we work with.
Yes, sir.
You guys be seeing that morning star, that evening star. We getting ready to get into the meat of it.
Go ahead.
But you know. All right now. So it's getting good now. So have you ever heard of when they have a good TV series on and it gets to the good part and then you gotta wait till next week?
Yes.
Well, look, we're gonna stop right here till tomorrow.
Okay.
But guess what the good news is, everyone?
We're gonna have a candlestick sermon
In the morning. Whatever we
There you
see,
go. Guess what the
whatever
good
we
news? In the morning, instead of us starting our call at 8 a.m. Eastern, we are having a bunch of candlesticks. Pop this thing, coming away. We are having a bunch of candlesticks coming in the morning
5 red.
right here at, let me refresh the page. Oh, okay, that's this Eastern time. At 7 a.m. Eastern, 6 a.m. Central, and 4 a.m. Pacific Standard Time. There's going to be 1, 2, 3, 4, 5 red high impact folders all at once. This is where the money is, ladies and gentlemen. So we're going to start for tomorrow morning. I'll be on the call 15 minutes, about 10 minutes before the hour. 10 minutes before the hour. So if it's 7 a.m. Eastern, we're talking 6:50 a.m. Eastern. So we can get ready for this. Because, see, we roll out with this. This going to be an incredible spike here. And we roll out with this spike. We don't need 7 o'clock. We can do it 1 hour early and finish and it's very rare that we see 5 red high impact folders at the same time. Even First Fridays is only 3.
Yep.
Okay, so what do you guys feel about that? Can you guys get up an hour early and let's make this thing happen together?
Yes, sir.
I know I'll be up.
I'll be up.
Yes, sir.
Okay, so that's the good news. Tomorrow, the next money call is at 7 a.m. Eastern, 6 a.m. Central, and 4 a.m. Pacific Standard Time, where we're going to be getting those tips. And we're going to look at the Great British Pound pairs. This is not going to be on gold.
Okay.
It's going to be on the Great British Pound US dollar pairs. Okay?
Yes, sir.
Okay.
So be ready for that. We're going to have some fun in the morning. And thank you guys for being on the call this evening, getting this training. We're going to get into them evening star and morning stars tomorrow. And we're going to have the money call in the morning an hour early. So everything is going to be very good. And I want to thank God for God and thank you guys for staying focused on this incredible journey. So we'll talk soon, okay? You all have a great evening.
You too.
You too.
Thank you, Rudy. Thank you.
Wait. One other thing now. If you guys learned something this evening, put a 777 in the chat. I had to do it.
777.
Okay. Wait, no, that's the wrong place.
In the chat room, if you enjoyed the call or learned something,
It just,
put
if you enjoy
777 in the chat.
what the pros do. Mhm.
Yeah, it was good training. Good training.
Very good call. Good call.
I just said, okay, good. All right, you guys have a great evening now.
Thank
All
you.
right. Be blessed, family.
Okay, and thank you, Bridget.
All right. You're welcome.
Okay. You too,
Bye-bye.
Tom. See you.